Hi traders, welcome to hotstockmarket.com, the friendliest and one of the most respected forums on the net. My name is Gil and I'm going to give you a brief introduction into the stock market and how to read stock charts. How'd you like the swivel and take the glasses off? Does it work for you? And let's jump straight into the good stuff. What's going on here? Lines going up, lines going down, blue, red, greens, little spiky things. I'm sure it all looks very complicated to anybody who hasn't been in the market before, but trust me, in 5 minutes time, this will all make a lot more sense. Well, most of it will make more sense. You're going to have to stick around for the rest of it. The first thing you got to know is that the market has two aspects to it. There's a fundamental side and a technical side. Often on the forums, you're going to hear investors talking about how the fundamentals look good, or maybe the technicals, they just stink. What are they talking about? Well, the fundamentals deal with everything that gives value to a company. Its assets, its liabilities, the PE ratios. The technicals deal with chart patterns. The fundamentals will tell you why it's a good time to buy or sell a stock. The technicals will tell you when it's possibly a good time to buy or sell a stock. I'm going to expand a bit now on the charting aspects of things. Those charts you saw in the beginning which look complicated, let's expand upon that. Let's use the example of a flea market, because the flea market, like the stock market, bases its prices on supply and demand. You are at the flea market and it's a beautiful day and you want to buy an umbrella. Give me a picture of an umbrella, please. Thank you. The vendor selling the umbrellas is selling them for $6. You think it's a bit pricey, you want to buy it for $3. So you bargain with the guy. You say, listen, it's 9:30 in the morning, not a cloud in the sky. I want this umbrella, I'll give you $3. He disagrees, he says he came for $4.50. You negotiate back and forth. Eventually, let's say you settle on $4. So I'm going to put a little dot there indicating you bought the umbrella at $4 at 9:30. If there's a guy standing behind you who sees you buy this umbrella and decides it's also a good idea to buy the umbrella, he'd probably get one around the same price, and another guy behind him maybe also. What do you think would happen if it got cloudy? Would the prices go up or down? They would probably do something like this. Let's say now that around 10:30 it started to rain. What do you think would happen? What I can tell you will happen is this. At 10:30, there's going to be a huge demand for umbrellas and everyone's going to rush to buy one. When this umbrella vendor sees everyone rushing to buy his umbrellas, he's going to jack up the prices and you're going to have a huge spike up. What do you think will happen if it stops raining? Well, people might still be buying, but I can tell you that there'll be less demand going through the day and all the clouds disappear around 2:30 or so. It's going to be sunny, less people buying, and the chart will do something like that. Does this look familiar to you? We just saw this in the beginning. This is exactly what a stock chart is. It's a bunch of points where demand meets supply. There is one important thing I want you to take home with you from this while you are at home. I want you to remember from this video, and that is the following, and I'm going to write it down even. You want to buy umbrellas when the sun is shining. Does that make sense? You don't want to be the guy that end up buying the umbrella up here. You want to be this guy. Now that you have a little better understanding of what those charts represent, it's time to start building yourself a watch list. And I'm going to borrow a quote from the famous investor Peter Lynch. He said, "Invest in what you know." Thank you, Peter Lynch. So what does this mean? I bet you know quite a bit. What cell phone are you using there? Is that an iPhone? Who makes that? Apple? Alpha, Alpha, Papa, Lima. That's the ticker symbol for Apple. Where do you bank? Bank of America? That's their ticker symbol. What do you drive? A Ford Mustang? Ticker symbol there for Ford. Did you have Raisin Bran this morning? Who makes that? That's Kellogg's. Ticker symbol K. Probably had to brush your teeth this morning, didn't you? Colgate? Sure. CL. What I've done here is I've taken a couple of companies which you are already familiar with. You already contribute to the bottom line of these companies. So follow the stock chart of F, see how they're doing. After a couple of weeks, you will start to get a feel for how the market works. Odds are, if you really like your cherry red Mustang, there are probably 1,000 other people who also like the Mustangs. If there's a lot of demand for Mustangs, what happens? That's right. It rains. No, I'm kidding. So follow the charts, get a feel for it, and most importantly, you need to visit hotstockmarket.com, drop by the education section, and ask our highly intelligent and good-looking members any questions you may have. Looking forward to seeing you on the boards. This is Stock Jockey, out.